Hey everyone, welcome to another Course Member live stream. So I've kind of changed everything in here a little bit. I don't know if you notice much, you might notice a little bit. So let me know if there are any issues like audio or whatever. This is the first time recording yesterday. If you're in my money course, you'll know the whole chaos theory. I literally chaos theored this whole thing yesterday. It was a disaster. Folks, so let's talk a little bit about what the heck is going on in the market right now. I want to start about something that we've been seeing now for a few weeks, and it's something that I think we just have to be really real with ourselves about. It's a dramatic shift to nothing other than safety right now. So let's go ahead and pull up. Webull here. Let's see what we got. Let's see if I can do this correctly. Oh, yep. See, no. Hold on, let me switch really quick. See, this is what happens when you redo the set. My little, my buttons, everything. There we go. Oh, I didn't click the MacBook button. Of course not. Give me one sec here. All right, so we'll hop on over here in just a second. There we go. Okay, so here's our Webull, and then we got that camera. Okay, good. So get used to this a little bit. Okay, so here's the thing that we're seeing right now. Literally, look at this. And this has been so consistent for the past, 3 months or so that we've seen, well, I would say probably March, April, May. We've seen the teeter-totter, right? We saw the teeter-totter between the retail service and hotel business, the airlines, the cruise lines. We'd see them down one day, and then we'd see, tech up the other day. And we go back and forth. That's what we saw in March and April and some of May. Well, the problem is after the second half of May and then going into June and then now especially in July, we're consistently seeing all of these guys lag. I mean, literally all of them lag. That is, the banks are lagging, the retail's lagging, the restaurants are lagging. I'm surprised Workhorse is down 10% today, but that's a whole different animal. All these guys lagging so heavily compared to the tech. And what I want to do is mention my theory as to why. This guy's a little overexposed. I'll fix that after the stream. Sorry. My POV, and we'll answer questions in just a moment. In case you're new here, welcome, by the way. The first thing I do is I rant about stocks, and then I'm going to answer questions, and then we'll go into some deal analysis. I got to lower the exposure on that thing. That's killing me. Okay, so here's the scoop. Consistently, the reason, in my opinion, we're seeing all of the tech blow up is because people are fearful. They're fearful of secondary shutdowns and long-run debt burdens. It's not even a matter anymore of, hey, let's get the Main Street lending program open and let's get people borrowing a ton of money. And you know what? The airlines will survive and Dave & Buster's will survive and stuff like that. It's not even that anymore. Now it's like hedge funds and investors are choosing, do I want to invest in a company that, yeah, its share price, maybe it'll double in the next 3 years, who knows? Vaccine news comes out, great. The airlines and the Dave & Buster's and the Cheesecake Factory, sure, they'll all do great, right? Or do I want to, because we don't know when that's going to come, do we want to just invest in the companies we know are going to be profitable and just put our money there? And in my opinion, that's exactly what we see happening here. So let's pop back on over one more time really quickly here and just talk about some of the favorites on the stock list here. So some of my favorites, obviously I was pitching Lemonade a lot last week. I think this is just IPO adjusting. I can't really take full crazy credit here for saying oh yay, it's up 31%. If anything, to me, Lemonade is a long-term buy. I love them as an insurance play. In fact, what I encourage all of you to do, and I read, I'm probably about 90% through the earnings report now, well, their first prospectus. What I recommend that all of you guys do is if you're thinking about Lemonade, is go to the Lemonade Insurance website. They only operate in 27 states, and just go through what it's like to get a quote with their bot. It's really, really impressive. Then we've got Square. Look, I've been bullish on Square, but I actually prefer Tesla over Square. So I moved my Square position into Tesla, even though I'm so heavy on Tesla. And that's mostly because even though Square has exposure to Bitcoin and they've got exposure with the Cash App and virtual paying, they're very heavily reliant on small business. I'm surprised they're doing this well. I wonder if it's because they're doing, other loans. I really want to dig in to see what's moving Square so much. because to me, they're so reliant on small business. Larger retailers like your Target, your grocery stores, the big chains you want to rely on, the Macy's, they're not using Square. And that's be it their pricing or whatever it is, I don't know, but it's something to keep an eye on with Square. Personally, I prefer the Tesla valuation over Square, but don't get me wrong, Square is a great company, so I don't think you can go wrong with Square. Uber's up today with their partnership on who would they Postmates, I think. I think they were trying to get Grubhub and that didn't work out. So Uber's doing okay today. Peloton, I'm really curious to see how resilient Peloton's going to be. You've got Nordic Track competing against them, but you know what you also have competing against them, and it's something that I've always kept an eye on. I'm going to pull this up here because I ordered a Peloton just mostly as an investor, but I also ordered this, and I'm going to put these two bikes next to each other. Hold on, I'll show you this. Look what I ordered. So the Peloton is like $2,500, 30-day, full refund. They'll even come pick it up from you, which is crazy, but also begs the question, like, how many people are going to take advantage of that, right? But take a look at this. Tell me more about the Square expansion stuff. I saw your comment out of the corner of my eye there. I want to know more about what you know, so tell me. Because when I stop investing in a company, I stop researching them as much as I should. So look at this. This is a $328 indoor exercise bike with a mount for the iPad. And you can do whatever the heck you want on the iPad. You're not tied to the Peloton infrastructure that way. So I have to say, I mean, this was a little bit of a, okay, this is something to keep an eye on when it comes to investing in like Peloton. Although I have to say they're still way back ordered. I think their next earnings report should look good. I don't know how much of that is being priced in now, but usually they rely on commissioned salespeople to sell their product, and they're not needing to do that right now because of all the online buzz. At Chipotle, I can't wrap my head around the Chipotle valuation. I honestly think that's just another safe play. It's like the only restaurant safe play that exists because it's so to-goable. And I know there's a lot of like, well, you could pick up cheesecake to go and this to go or that to go, blah, 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 blah. Look, I get it, but there's nothing like a to-go burrito compared to that salmon that's been in the box for 10 minutes and it's all steamy and it's getting a little soggy and gross. I've done the cheesecake to go. I'm not digging it. One of the reasons I never started off my investments in cheesecake. Obviously, the other winners, though, right now, some of the favorites that I've been talking about, I mean, really, you can't lose right now in the tech space, so I can't, cheer myself, but some of the ones that we've been talking about consistently here on the live streams have regularly. It's been Tesla, Peloton, Amazon, Etsy, and Redfin. All of them are just surging today, which, I mean, this is ridiculous, how much of a green day it is today. And I know it's easy to look at this and say, oh my gosh, bubble. But really, a lot of these gains are offset by the losers over here. Substantial loser. I mean, Wynn, Carnival, these guys are just getting, Dave & Buster's, Simon Property Group, these guys are just constantly getting slaughtered. And it sort of begs the question, like, how much exposure do you really want to these guys? So I've personally reduced my exposure to all of these to under 10%. And I don't mind being closer to 5% in these because, yeah, it's speculative. Like, oh, yeah, we could double our value or double our money or whatever. But I like the long run ride that we've got over here. And that's I've really solely been buying Amazon, Apple, Tesla, Redfin, Etsy, and recently Lemonade, but almost solely been buying those since about the beginning to mid-May. I haven't been adding to the spec stocks. I moved a little bit of Simon Property Group to Dave & Buster's, but I haven't been adding to them. And I'm not jazzed about them because there is that real long run. Honestly, there's nothing stopping all of the airlines and all of the restaurants from going bankrupt. There's nothing stopping that. The Main Street loans is not going to prevent that. So, okay, let's do a little bit of Q&A here. Let's see. There we go. Okay, not bad for the first day in this new kind of revised set here. All right, let's do some questions and then we'll see if we can do some deal analysis. Let me see here. Oh, there we go. Okay, I thought for a second there YouTube changed something on me again. All right, shoulda, sold, play. Shoulda, coulda, woulda. Look, the thing is, always remember this. It's easy to say should have done something. At the time, you can never know. And so what I recommend is always look at stocks as what can I do going forward? Based on what you know right now, Where do you feel more comfortable? If you feel more comfortable in Tesla than Dave and Buster's, move over. Because here's the reality. Tesla is not going to go bankrupt. The reality is Tesla will be a $2,000 plus stock at some point in the future. We are guessing that Dave & Buster's might go back to normal at some point in the next 5 years before going bankrupt. But we don't know. As if they keep shutting restaurants and bars down, that's Dave & Buster's money right there. So it's not good. It's not good. I'm glad I bought Lemonade. The reason it's honestly, it could keep surging. I didn't love the idea of buying Lemonade beyond 70, 75. I put in a purchase order for Lemonade at 7:30 at 6:30 a.m. this morning, which within an hour it was already at $90. So it just like instantly surged up. It's like the hedge funds caught wind of it. But and then I look back now and I'm like, oh man, should have put more money in. But you can't think like that. You got to think forward. All right, what do we got here? Oh, I do have to change you're right. Thanks, Barberman. Kevin, I took the PPP first. Can I still expect the EIDL after? You can take the PPP and the EIDL. You just have to spend them on separate things. Chinese stocks are on fire. Yeah, one of the reasons the Chinese stocks are so much on fire is because the Chinese Communist Party has been putting out a lot of press over the weekend about how great everything is and how great the recovery is. And they're really trying to prop the stock market up, and they are succeeding. All right. If someone is co-signing with you, do they also have to be on title? Generally, yes, but you can put them on as a 1% owner. Just go tenants in common. All right. Hi, Kevin. Buy or hold Tesla. Okay, so I personally, I love Lemonade. I love Tesla. We've had like what are we at now? 4 or 5 days in a row now of just solid gains. It's a dangerous time to buy. But you just don't know. I mean, we could have a red day and everything falls 2%, after another 10%. You don't know in this market. What I know with certainty is there is a consolidation of risk that is dramatically happening, especially amongst the hedge funds. And that's why we're seeing so much money flood into companies like Lemonade and Square and Tesla. People are desperate to try to find a deal right now. And that's what happened with the Lemonade IPO. When it IPO'd, I was looking at it like, that's coming out cheap. It was expected to come out at $49. And I'm like, that's, for a growth company, that was coming out at like a forward PE of like 60. And I'm like, with Spotify or Shopify and Zoom and their valuations in like the multi hundreds, I'm like, that's going to get bid up. But you never know. You just never know. I mean, I'm glad I put money on it, but again, looking back, it's like, wish I spent more, but can't think like that. So, they still have not released the names for the Main Street lending program. So it's not out. Do you have any kind of mainline auto shutoff valves that can detect leaks? I'm worried about leaks. Usually not. Usually, it sounds terrible, but it's kind of like, look, if there's a flood in a property, the insurance company is going to fix all the stuff for me for whatever the cost of my deductible is, right? So, and if the insurance company is not demanding I put in auto shutoff valves in the event of a leak, it's not my problem. What did I like about the S1 in Lemonade? Yeah, what I liked about it really was that what they are trying to do is they're trying to create a consistent income stream, and they're trying to focus solely on growth rather than on profits from investing in the insurance business. So it actually simplifies the whole concept of investing in an insurance company. Really, what you're investing in is their ability to market to millennials and keep millennials sticking with their brand. That's almost the only thing that you're investing in. And they're the only one who's really replaced the broker right now, who's made it easy for millennials to understand insurance, really anybody to understand insurance. And that's what you're investing in. You're not so much investing in them as an insurance company who's able to invest the float, so to speak, because they reinsure 75% of their premiums, and then they try to hedge the other 25% they keep. They take some commission money. Really, it's strictly on growing the user base. That's where you're making money with Lemonade. Awesome. Good job on Square. Yeah, you would definitely love them. A risk reward, really, I mean, you have to kind of put Lemonade up there with all of these other companies. I'm not there's no indication of a Lemonade going away, so I'm not concerned about them at all. Their growth has been phenomenal. If anything, they're insulated in times like this. They're so AI and autonomous driven, the fact that they will judge your premium based on whether or not you opened their terms of services. Like, that's next level right there. That's brilliant that they can find linkages between that kind of crap. Is fascinating to me. I have used an iPad on a standard spin bike and it works great. Could impact. Yeah, I do think Hustlin' Dad. I do think so. And Peloton is out of all my holdings, I would personally rather today, if I had to make a decision today, I would rather take my money off Peloton and put it into Lemonade. I might do that. Not today. But there could come a time, probably maybe in like 2 or 3 weeks after I get the bike, there might come a time I do that. So yeah. I mean, I don't have a new price target on Lemonade. All my price targets are blown away. I mean, it's ridiculous. We're coming on my 2022 price target for Amazon. We passed my 2022 price target for Tesla. We passed my price target for Redfin, for Etsy. Apple didn't have a future price target on Apple. I can't say that we passed that because I didn't put a future target on them. But all the future targets we placed, we passed. You know, at this point, I'm glad I made we did the one lecture or the one live stream where I said, you know, big shift or big change or whatever. It's why when you see these titles, these are good ones to watch. But a few weeks ago, I said I consolidated. I think a lot of you remember this. I consolidated a lot because I had like 20 holdings. It was ridiculous. You know, I had JP Morgan, I had Disney, I had AT&T. I had Netflix. Netflix is okay, but I still had the JP Morgan, the Disney, and the Target, the AT&T. These were some of my favorites in March and April, and they did great in March and April, but I did dump them. So I dumped all of them into, you know, the main buy that we've got now, which is the Peloton, the Tesla, Redfin, Etsy. You know, and I mean, on a day like today, it looks like, oh, great, that was a great decision. I mean, you don't know. If a vaccine comes out tomorrow, all these guys could get hammered, and then, you know, maybe the other guys will do well again. It's just, it's I don't know. It's too speculative to me to wait for this vaccine. So joined last night. I'm in LA. Current property is 120K in equity. I have an equity line I haven't touched. Should I keep it or refinance? Yeah, I mean, like if your mortgage is at 4.1, I would get a quote to see what you could refinance for, because you might be able to get that down to honestly like 2.9 or something like that. I don't look. I mean, I don't buy big. I try never to buy on green days. There are some times though where it makes sense to nibble a little bit. I call it on green days. It's very difficult because it's hard to buy when something's up like 30%. I'd rather go shopping in the red, but I can't buy anything in the red right now. And if you know, sometimes you sit around for weeks and everything's just you know, the stuff that you want is every day just up a little bit more. And so you do have to be careful about that because there's always going to come you know, a big red day again. So, you know, I try to save a lot of dry powder for the big red days. That's why I say, in general, buy on red days. Am I going to rule out buying on a green day 100%? No, because I bought on Lemonade's IPO day. You know, I bought on IPO day because I go, this is undervalued. And you know, of course, there was a green day on IPO day. Well, not always. Nikola getting a little slaughtered right now. They've had like 2 consecutive days here of -8%. Not surprising to me because they have so much flow coming out right now with the pipe shares that we talked about. By the way, Lemonade's going to have that as well. Right now, they only have like 12,000 shares outstanding, and they're going to go up to about 48. I'm sorry, they have about 12 million shares outstanding, and they're going to go out up to about 48 million shares outstanding. So, you know, I don't know that you want to buy Nikola or Lemonade too high, because you're going to see a similar thing happen to Lemonade probably as what you're seeing to Nikola right now. Although I personally would rather own Lemonade over Nikola at the time being. I'm paying attention to Nikola, though. I'm definitely paying attention to Nikola. Wood foundations are fine. What's wrong with a wood foundation? What do you mean? Do you not have a stem wall around? Give me a little bit more detail. What year was the place built? I applied for PPP with Cabbage a week ago. They denied me. Okay, well, then go apply with Blue Vine. You know, Genius was up like 30% in the pre-market. It was insane. Square has expanded a lot since no. I know they've expanded a lot. Like, you're right. They're way past the point of sale. You know, I see them as, again, I saw them in Cash App. I see them in the Bitcoin realm. But the difference between a HELOC and a fixed equity loan. A fixed equity loan, I honestly, I don't know why you would ever take a fixed equity loan as opposed to a HELOC. So you're right. That's not something I talk about in the course because it's so niche. I almost never see that used. Wood Foundation, built in 1989. Okay, inspectors care about it. Is it just a raised foundation? I mean, is there a concrete perimeter foundation? It's okay if it's a raised foundation. Raised foundations can be great, but there's got to be a concrete foundation around the actual outside of the property. And what do the piers look like? Maybe post some pictures if you can in the renovation section in Discord. It's possible that if you have an inspector that only inspects slab properties, a home inspector, of course they're going to be unfamiliar with it. All right, let's go see if we could do a couple of deal analyses here. But yeah, I think that's a pretty good catch up here to give y'all a little bit of an update as far as what's going on. Just be aware of that though with Lemonade, as you're gonna have some share dilution coming. All right, which again makes $90 I feel like high, but I mean, what do I know? This market's so bizarre. Okay. So, okay, we got some deal analyses. We had quite a few people that got into escrow here who wrote offers. Good. Okay, well, let's go ahead and start with AJD. And let's see what we got. Any other questions you have, feel free to ask as well. I'll keep popping in on questions here. But let's start with AJD here. So we're on the fence about this one. It's a single family, 2-story home, a small complex, $70 HOA. It needs to be updated. You put an offer in at $850. They countered at $875. We think it'll appraise for $930 after $30K fix up. It was built in 1992. No yeah buts. Yeah, and so remember, if I skipped you, I'm sorry. I did. Yeah, no, I saw your question about the wedge deal here. Is that the one, Peter? I'm going to get back to you because Erica, I still have to get Erica. So I've got a few questions here at the bottom I still got to get to. Yeah, no, Peter, you're here at the end with everybody else. Only 10K advance. So we talked about the SPB. Yeah, we talked about that. No, I'm going to get back to these last few ones here. Don't worry about them. All right, so let's go ahead and grab this. Okay, Costa Mesa. I mean, this is great. You guys are close to IKEA. IKEA right now is so busy. If IKEA were a public company, this would be a company that I would honestly love, but they're private. So this has been on the market for 109 days. I don't love that because it increases the odds of you not getting a deal on it. There's nothing wedgy about this so far. It's very move-in ready. It's dated, right? It's dated furniture, very dated kitchen. So the flooring's okay, but you've got this mismatch going over to the kitchen. I'm sorry, what's going on over here? This is the master bath. I mean, look at the different styles you've got going on here. It's frustrating because it's not bad enough to where it's going to sell for a wedge price. You've got these sort of multi-different tiles and styles. Like they got the gray theme over here. Then they got the Mexican saltillo tile-ish. It's not really a saltillo style, but it's that kind of clay style, which is very, very popular out here. We love the Mexican saltillo tiles out here. And then you've got this like farmhouse style here with the plantation shutters. I mean, there's so many different styles going on in this product. Like, what is this? I honestly am shocked. The amount of different styles in this property are very, very frustrating. And it's the same thing out here. It's like, seriously, it's like when you see one funky thing in one part of the house, they got to funkify everything else. Like, why are these little tiles here next to the concrete and like they threw some slate in between the concrete? My gosh. I mean, geez. So, okay, let's be real here. The issue with this is you're not going to get a deal on this. It's been on the market for so long because it's overpriced. $875 is maybe a market value deal, but then you're going to go in and you're going to fix up stuff, and really you're going to get maybe $1 for $1 out. You'll spend $1, maybe you'll get $1 back, maybe, but that's tough. I do not love this one. I think you are right to be on the fence on this one. I think you have a higher likelihood of getting ripped off on this. So 23-ish, something like that. Okay, where were we? So let's look at a couple of your comps. Although I can tell you already, I'm not loving it. I will gladly, though, look at your comps. Let's see what they countered you with. I love the area, so keep buying there. So they're removing termite report. They're just cleaning up your offer. Chandelier to stay. Did you seriously ask them to remove the chandelier? Come on, you can't do that. but that's like slapping them upside the face, right? No worries though. Like I get it. The chandelier should go. Unless maybe they originally said they wanted the chandelier to stay or to be removed, and now they're changing their mind and they don't want their chandelier. Which is also quite possible. So I'm not blaming you. I want to protect you. So I don't want to come across as like hard here. I just want to help you out here. So here's a pending sale at a smaller square footage, right? But this is modern. Like they did this right. Even though it's got the older plantation shutters, that the kitchen works. Don't love the blue, but the floor works with the kitchen, which is good. It could use some pressure washing. They got a weird rug there. Okay. All right. I mean, see, you don't have to tear out these cabinets. You don't have to tear out the flooring. They did the flooring even upstairs. They went to a tile in the bathroom and tried to sort of match the wood look. But all of this is a relatively consistent style. And what you should do is, if you're seriously considering this property, call up this agent and find out how close they got to their listing price. Here's a sold at $912. We don't have any pictures of it. I will see if we can Redfin hack it. We'll see here. Yeah, maybe. Sometimes Redfin will show the pictures. Here's a sold at $905. That's larger than yours. Also no pictures, but this one sold in November. So some of these are old sales, though. That's another problem. See, November sales. I mean, the market's moved since November. We got to be real. Like these properties that are properly remodeled, you're right. I mean, properly remodeled, yeah, you probably are 930, something like that. I don't think you're wrong about that. Let's see if we can get Redfin on this one. What did this one sell for? This one sold for $905, and this one sold also in November. And okay, I mean, decent. It's clean. It's not highly upgraded. A little bit of an older kitchen. This is a good comp. It's built in '01, slightly newer than yours. Yeah. I mean, so I don't think you're off with the 930, but I don't think I would go crazy high on these on this counter offer situation you got going on here. So not loving the price. Hold firm or pass. My take. Yeah, no worries. I'm comfortable. Wait, what's this? Hold on. Huge price. Hold on a second. Is this an active? What's the I mean, how this is how do I know if this is active? Pre-foreclosures or crap. Let's look it up on Redfin really quick. Quick look. For sale by owner. Oh, come on. 1070. The guy's smoking. Okay, so let's move on. What do we got over here? Obelisk. Okay, so single family. It's a turnkey property that has a huge tree out front. Okay. Reduce work from an hour to 8 minutes, your commute. That's huge. Right there alone, I'm optimistic about this deal. Because commutes, as we talk about in the money course and the happiness course, so to speak, reduce or long commutes severely affect happiness. They say a happy median for commutes is like 15 minutes. It gives you enough time to decompress. Okay, first property, live there for a year, build equity, and then move. Okay, built a roof and HVAC was replaced in 14. These are the comps. Let's look at the actual property first. Okay, I'm going to do Q&A right after this one. So, is this your deal? It's possible that you got this thing in escrow and then they took it off Zillow. Okay, yeah, offer was accepted at $255 versus $260 listing. Okay, so you got the thing at $255. So cool. Got some hardwood floor here, missing some lighting, dated kitchen, dual pane windows, siding looks good. Like you said already, roof and that and AC HVAC has been done. A quarter of an acre lot. Okay. What was the size again? That's going to help us with our comps. And then questions right after this. Okay, let's get our 3 comps, 1650. Let's see how much of this I can remember. Wait, I only opened up 2. Peach, Skylark. Now, I'm assuming that your comps are relatively close. I don't really want to go through the time to map it all right now. Why would this sell for $115? What? Okay, now I'm confused. So I gotta come back to that. $115. Here's a 261er. Your square footage is 1650. Here's a larger property that sold for $261. What a mess of comps already. What's going on? Oh, much smaller lot. Okay, well, that's good for you. And then 275, substantially larger. These are not good comps. This is very difficult to value. It should be easy. Tiny lot. Okay, so but still, even though it's on like a no lot. I mean, these comps are not good. Let's try to find some more aligning comps because we're all over the place in terms of lot size and property square footage, and that's not good. So where's yours? Your property is yours is 1 Woodbury Circle. Okay, so here's what we're gonna do. We're gonna X this and we're gonna zoom in. Let's zoom in and then we'll do Q&A and then we're done. Come on. X Woodbury Circle. Or is it Wildberry? Oh, there. Woodbury Circle. Okay, so you got the Colts. I like the location. Let's strictly try to understand your neighborhood. Let's see what you got going on. These are not a lot of sales, but if I could at least get one recent one. Oh, come on. That's a money comp right there. Oh, you gave me that one. That's so recent. Okay, good. Good. Okay, well, here's the better money comp because this is a model matched yours. This is the bigger one on your one street over, but here's the bigger one, or I'm sorry, here's the one that matches your size. So here's a model match, it looks like, at 1650 because yours is 1650, pretty sure. Let's open yours again to make sure really quick. So yours, 1650, 3-bed, 2-bath. Okay, good. So we got ourselves a model match here. We have no pictures on this. It sold for 196. Why did a model match sell for 196? And you're paying like 2 something. No, that's not what it sold for, is it? Let's see. Okay, here we go. Oh, this is so weird. It's all over the place, this neighborhood. Here we go. Okay, May 29th, sold for 245. And okay, decent condition. You know, something's updated, kitchen not updated. Bathroom's updated, but not the kitchen. Okay. All right, so this is a really good comp because this is a smaller lot. So you got the lot size up on this guy. You are paying about $10,000 more than him. The condition, I would say his condition's a little bit better though. So, I wouldn't say there's a big wedge here. Let me see if I can find another one I have no idea what's going on with this $28,000 thing. I'm going to call that a toss out. I'd love to find another model match. See, the last model match you had was back here for 193 a year ago. That's shocking. So you really got to go based off the recent model match, and that was a 10,000 square foot lot. So you have a good lot. You're paying a premium for the lot, but that's okay. I'd say you're paying roughly, you're paying a fair price. You're not overpaying for the deal. I would not say that you're getting like a crazy killer like wedge deal or anything, but you're definitely not overpaying for the deal. Okay, let's answer some other questions here. So let's see what we got here. So we talked about the wood foundation thing. What insurance deductible do you recommend? I usually go 5K. If I'm going to put a claim in, it's got to be something big. So I bought a big new home in San Antonio with 0 down. Paid extra for 2.75 APR that won't pay off for 7 years. Should I sell and get something smaller that's below market value? Why would you sell it? I think what you're saying is you paid points that you're not going to recoup for 7 years. Who cares? You had no idea rates were going to fall this low. So, oh well. I wouldn't feel bad because you paid points. You want to sell? No, come on. You probably got a good house there. I'm happy that you bought that place in San Antonio. You put 0 down. Why would you pay the selling cost? You're going to give away any of the equity that you've created. If you want to move and you want to buy another deal, then find a reason to move and do that. But I would keep that first place. Big new home in San Antonio. Was it brand new construction too? If that thing was new construction too, keep that thing, man. All right. How many deals did you make as a real estate agent your first year? Like 3? It was like nothing. I actually had a condo flood last week. Upstairs neighbor's faucet, kitchen, bathroom, ceiling. Any advice on dealing with the insurance company? Yeah, we've got some lectures on that in the management course. I'm not sure you're in that management course, but the most important thing that you got to do is absolutely every single bill or expense that you incur, you need to not only write down the amount, write that down on some kind of sheet, but also keep the receipt, and you better sort that in a folder. Make your life simple as you're going through it, because at the end, they're only going to compensate you if you give them a receipt for everything, and they will criticize and scrutinize them. So you better have good documentation. Take photos, everything. If they say something verbally, you email it to them. Currently out of work with Rona. Is there any other way to qualify? It's very difficult to qualify without a job right now. The lenders are very, very tight with that. I would do whatever you could to get a job back. Kevin, do you think there's a place for more traditional stocks in your portfolio? What do you think? Is there? No, I mean, if you mean like traditional stocks, like a GE or I don't know, Intel and stuff like that. No. You know, I sold out of the AT&T, the Target, the Disney. No thanks. Should we pull out our 401k under the stimulus rules to buy a personal home? If you find a good deal, yes. If you do have to, like, there's a rule that says you have to pay it back within 3 years to avoid the penalty for withdrawing. But talk to your CPA about that. There might be ways around that. So, okay, Peter. Well, if just a heads up, you can't email me about a situation. This is the best place to talk about the situations. Or in the chat, the private chat. We've been doing quite a few voice chats. Those have been really fun. I've really been enjoying those. So if you folks want to voice chat with me and have a little bit more of a one-on-one dialogue, check out that Menti thing. You know, go to the course main site, use the coupon code, and join that. So let's see what your situation is. I emailed you. Yeah. So let's start there. I have a house that I bought new. I could probably rent out for $2,200, but after mortgage of $2,276, and you got the HOA of $170. Okay, yeah. So let's add this up. You got a lot of. Well, hold on. Doesn't your mortgage include the insurance and the property taxes? Because you didn't mention property taxes, so I'm assuming your mortgage probably includes both of those. Okay, let's see where. So I don't think I'm going to be able to get to everything today because we're already at like 37 minutes here. So I'm going to answer a few more questions, and then we'll pick up the rest tomorrow. Or we could chat in Discord or in that Menti thing. I'll probably do the Menti thing again later today. No guarantees, though. It depends on how the day goes, what the news is of the day. Okay, so you're in for $2,276 plus $167 on the HOA. And is it a new property? You bought new. Okay, so it's new. Okay, that's good. Property manager, $250. That's a lot of money on the property manager. I mean, I wonder, Peter, could you? I do wonder if you could do the management yourself. But let's say you're not in that situation. I'm going to assume the management was already part of, the homeowner's insurance was already part of your mortgage. And I'm going to, you shouldn't have $200 of repairs for a new construction place. But either way, you're upside down. I mean, you're upside down by about $600 a month or something like that. So the question you have to ask yourself, is it worth keeping the property when it costs you $7,200 per year, right? And so you have to analyze, well, do I believe in the area? Do I think, what kind of value do I have in the property? You're going to pay, if you sell this thing, you're going to give away 3 or 4 years of those losses anyway by selling right away. So it's almost kind of like you could keep those and spread those out over a few years. You should look at your principal pay down. And you should also look at your capacity for raising the rent, because if you can raise the rent $50 per year, that's going to go away. You're going to start eating into that pretty quickly. You've got new construction. You probably got a 10-year builder warranty. We know it wasn't a wedge deal because you bought new construction. New construction is not a wedge deal. That's okay, though. You got a 10-year builder warranty. You're paying a premium for low headache, right? And low risk. So, and I think that's what you're seeing here. So, hey, Kevin, okay, wood foundation. Okay, that's not one. Hold on. You didn't see this in the real. Okay, we talked about that. No, there is no concrete. The wood is placed on dirt. That's it. Yeah, Daniel, that's weird. That's like the old Sears built homes that you saw from the 1920s. I'm not excited about that. When can we expect the remaining lemonade shares to start coming on the market? It's difficult to say. They usually trickle out. So you can't really time that. They're in the S1. I believe actually wait a minute. I'm wrong. I'm pretty sure there's a 180-day moratorium on selling the lemonade shares. 180. Let me just do a quick. Oh, here we go. Look how fast I got that. Come on. Can we get a like on this video for how fast I pulled that crap up? Look at this. See, here we go. And look, I even changed the color of my pencil to the lemonade color. Stupid. Okay, but look at this. So here we go. Market price could decline as a result of a sale of a large number of shares of our common stock, based on about 44 million of common stock outstanding. We will have 55 million outstanding. Right now, they only have about 12 outstanding, I believe. So they will have about 55. Assuming no extra, okay, lockup agreements. Here we go. Underwriters, okay, will not sell any of our stock. Wait, who though? Or I'm gonna have to read it. This is so confusing to just try to read this really quick on a live stream. I'm gonna have to sit here and read this again. Into lockup agreements with the underwriters, our executive offers, directors, or holders substantial, or have entered into. Okay, so it's only these guys, the executive officers, directors, and holders, and the holders, and directors and holders of substantially all of our capital stock. Okay, everyone. So everyone, have entered into market standoff agreements, which basically saying they won't sell with the underwriters, subject to specific exceptions, not to sell any stock for at least 180 days following the date of this prospectus. Okay, so July 2nd. So you're talking about, what is that, 6 months on top of July? That's January, right? January 2nd, or is that January 2nd? Yeah, because June brings you to December, so that's January 2nd. So you're not really worried about these kind of sales trickling in at least until next year. So it's something that the Nikola situation did not have. Okay, all right. Let's see what else we got. Let's do a quick other look here. Okay, we did answer that. Do yourself gone wrong? No kidding. Where do you watch the opening bell live? CNBC. Should I sell my big 1 year hold home at a loss? Why? Why would you sell? Why would you sell real estate right now? I do want to know. Give me a good reason why you would sell right now. If you're seriously thinking about selling, join the mentee thing. It's like $89 a month, but it's like $89 if you use a coupon. Join that, and before you spend $30,000 selling a property, come talk to me. Thoughts on EXP? It's fine. You're not going to get great training. I mean, don't get me wrong. I shouldn't say that. That's a slam on EXP. You're not going to get that in-person, one-on-one mentoring from grandpa who's been doing this for 30 years. You do get that more modern virtual training and stuff. If you go to it, I think it could be good. I think it's going to be a big hit to Remax and the Coldwells and all that stuff. The same thing for finding off-market deals. Okay, deal and renovate. Okay, last question. There's a post and renovations, I guess. What do we got? Where's a post? No, I think you posted somewhere. Where'd you say you posted? Oh, submit for. Oh, here it is. Oh man, I'm behind on these remodels. Oh man, lighting for downstairs, rent prices in the high three. Hubby can do the work. Okay. So really quick, what do I think about adding can lights? I don't know that you're going to get the money back for it. I personally would not do it. I know you guys could do it yourself, so maybe there's a benefit there. I got to get back to these other deal analyses. So we'll come back to Beach Life and Mr. Sean here. We'll do those tomorrow. I'll remember to do this tomorrow. I'm not a big fan of spending the money on adding can lighting, mostly because it's surprising. But I visit tenants sometimes, and they literally have all the lights off. I don't get it. Like I'm one of those people who has to turn every single light on. But I have found that I am weird in that sense, that it seems like 90% of people have the vast majority of the lights off. And so that has actually kept me from spending more money because I'm like, I'm the weird one adding lights everywhere. Nobody else cares. It looks good for, showing it or whatever. But in terms of longevity, I don't know if that makes a difference. I don't know if it's worth it. I mean, if you're going to do it, and this is the problem, though, you got to be careful. You get into that concept of if you're going to do it, you may as well do it now because you're going to retexture the ceiling anyway. Fine, but you get, running wires through a vaulted ceiling. You don't have an attic there either, usually, so it gets a little more complicated. You're cutting more drywall. You're really creating more work. Me, I would pass. Put a nice little Philips Hue light in the corner or something like that. People can change the colors. They'll get more fun out of that. All right, folks. Thank you so much for being here. We will see you tomorrow at 9. Thanks, everyone. Bye.